Hello everyone, my name is Rosalind Ononeze. I'm a local real estate consultant in the Metro Vancouver, Fraser Valley area, and I have some news to bring to you today. So I know it's been a while since we last spoke. I took the summer off and took time to recuperate and rest from surgery. And now that I'm back, I have some things that I want us to talk about because the market has shifted and this year has been a different kind of year. And so today I actually have 5 things that I want to talk about that we can expect to see this fall. The first thing is rate cuts. Yes, you heard it here first. You can expect that we're probably going to be seeing some further rate cuts to come. We've already had some rate cuts, as you know, but because of what we're seeing in the economic market and because of what we're experiencing in the world of business, we're seeing some business insolvencies. We're seeing that some companies are having a hard time hanging on to their employees. And so because of that, we anticipate that when business borrowing decreases, we know what happens to the economy because the economy is largely fueled by businesses. So right now we're seeing that the benchmark rate for interest rates are it's at 4.25% with the Bank of Canada. And we can anticipate a further rate cut at least by 0.25 and some are speculating 0.5. We're seeing that the US and Canadian economic activity has really slowed down. And even in June and July, we expect that the inflation, the numbers that we've gotten from inflation have quite substantially reduced. And we're looking at they've slowed down to 2.5%. And the recent CPI, the Consumer Price Index, shows us that the annual inflation has slowed down to 2%. And so we haven't seen these numbers since February. February of 2021. So, these are all indicators that are letting us know that we're probably looking at further rate cuts right into 2025. All right, number 2, what we're seeing is that buyers have been waiting and they're in a bit of a holding pattern. And we're expecting that that's probably going to continue right into the end of the year. Part of the reason is because buyers just are waiting to see if they can qualify for more house. They want to know if interest rates drop, that'll get them that extra $25K or that extra $30K. And in some cases, it does make sense for people to wait. And so because of that, sellers are seeing and will continue to probably see that there is a little bit of a slowdown with this market. Number 3, we can expect that the Fraser Valley market will continue to outpace the Metro Vancouver market. And we have already been seeing this, homes that are in the Abbotsford area are doing well, as compared to Vancouver. And part of that is just because of price point. Many people can afford and in those areas as compared to being in Vancouver. And the reality is that since COVID, many work from home. If I only have to go into the office 1 or 2 days a week, I might be willing to do the drive if it means that I can actually live in a home that is bigger, gives you more space, maybe more space for the kids. Affordability just changes everything, So we are seeing that the Fraser Valley is outpacing Metro Vancouver. We can expect that's probably going to continue. All right, number 4, incentives for buyers from developers. We definitely have seen that developers are trying to do everything that they can to incentivize buyers to purchase into their projects. And, we're seeing everything from down to 5% and, getting decorating allowance, and some are even giving money back, those kinds of things. And we can expect that that will continue to happen as the market slows down. And that brings us to number 5. We anticipate that we may be in for a new normal, which means that we may have a slower return back to what we were used to during the pandemic. And that's because things have just changed. There's been tightening. We've seen a tightening in immigration for sure. And that's not to say that the Vancouver market is going to crash. I don't believe that's going to happen because we still have pent up demand. It's just that the demand is put on pause. And so we'll still have to deal with that issue because developers are being penalized and they're not able to build as fast and as much as they want to because of all the fees that they're incurring from the cities, from the municipal governments that are preventing them from being able to really expand and build, which is what we need. We need more buildings just to bring the housing market down a bit. So anyway, that all to say is that we're going to have to adjust to a new normal. Now, Now I've given you 5 things that you can expect for the rest of the fall and into the winter. And now I want to talk about the two latest, I would say announcements that we've seen in the real estate market. You've probably already heard about this, but we're now with a 30-year amortization. So there's been a lot of talk about the possibility of this happening. And guess what? It's here. So with 30-year amortizations, what happens is the idea is that the government was looking for ways to make it easier for younger Canadians to afford their dream of home ownership, and also to encourage new supply. So the idea is that if you are purchasing new construction, if you are a first-time home buyer, now your payments can be stretched an additional 5 years, bringing your monthly payments a bit lower and making it more affordable. Because a lot of first-time home buyers are comparing rent against the payments of owning a home, in addition to insurance and paying taxes on the land. And sometimes when you add all those fees and costs into it, it's just out of reach. The 30-year amortization is designed to help reel in those payments and make them a little bit more manageable. I'll have a link down in the show notes for you to read more about that if you want to. Now, the other thing that we are now seeing, number two, second announcement, is that we saw an increase in the cap of insured mortgages. So we went from $1 million to $1.5 million. And mind you, my understanding is that this is not yet being implemented, but will be coming in months to come. And what it is currently, if you are buying a house that is under $1 million, you do not have to put more than 20% down. But I guess the other thing about that is that you get what we call an insured mortgage. An insured mortgage is also referred to as a high ratio mortgage or transactionally insured mortgage. And you must follow a certain criteria in order to be able to have this. And the advantage to the buyer is that they don't have to put 20% down. They can put 5% on the first 500,000 and 10% on the remainder, the balance between the 500 and the million. So that's what we call an insured mortgage. And basically there are additional fees that you would pay on top of a typical mortgage. And that is for CMHC to guarantee and help safeguard the bank in the event that you are unable to continue with your payments. A reminder that it doesn't safeguard you, the purchaser, it safeguards the bank. Now, if you're paying a down payment of more than 20%, no problem. You don't need to have an insured mortgage and you're good to go. Now, back to the announcement. That cap of $1 million has increased to $1.5 million. So that means potentially that if someone were to say they wanted to buy a house that was $1.2 million, for example, and you have, before you would have had to put down 20% of $1.2 million, which is $240,000. Not a lot of people have that kind of cash unless maybe you've sold a property or something like that. So the government, in order to try and help people, has now increased that cap. So now you can put less than 20% up to $1.5 million. Now, some of the regulations are similar. You still need to have at least 5% of the first 500,000 and 10% of the remainder up to 1.5 million. So what that would look like, for example, for a home that's $1.2 million, instead of putting down 240,000, for example, you would put down 5% of the first 500,000, right? And then plus 10% of the 700,000 that's remaining. And that would bring you to a total of I think my calculations are something like 90,000 with some odd dollars. So that is a huge break. I believe it's 98,000 if my math is correct. That's a huge break for people. 240 compared to 98,000. I mean, the difference is astronomical, right? So that is the second announcement that many people are waiting for. And I think that this is going to help people who want to purchase in that $1 million plus bracket. All right. We finished with the two latest announcements in real estate. I want to just touch on a couple of other things that are happening in the world of real estate so that you've got that information and you can feel free to also follow up with those articles. The city of Langley, according to the Langley Advanced Times, has now met a couple of times in regards to this new apartment development in the Willoughby Slope area. We're looking at 509 new apartments and 99 townhouses in this major development area. At the council's last meeting in September, They passed the first and second readings of the rezoning bylaws unanimously. So the project requires obviously further votes for it to be considered final approval, but we're looking at 11 acres of development, 4.64 hectares of land, and that's going to be right at the 206 block area near 67 and 68 Avenue. You might know exactly where that is, and it's just west to the Willoughby connector. I'll have a link pointing to that in the show notes, so if you want to read further about that article, you can definitely feel free to do that. I also want to draw your attention to another article, which is so interesting. So it turns out that many of you know Science World area, that's False Creek. There is a McDonald's that is a landmark there. And actually, the city of Vancouver is looking at the possibility of having that landmark rezoned. So this is a plan, like I said, to redevelop the McDonald's that's next to the Science World. I remember going to that McDonald's as a kid. So to have that no longer there is like, ooh. Anyway, it's a redevelopment of the 1.15 acres in the McDonald's restaurant, and that's at 1527 Main Street, and located next to the SkyTrain area there. And the whole idea is that they want to put up a tower. It'll be converted into a couple of mixed use towers with secured purpose-built rental homes being their primary use. Well, thanks for watching. My name is Rosalyn Ononeze. I'm a local realtor in the Vancouver and Fraser Valley area, and I'm here to help you. If you would like to sign up for my newsletter, please do that because I send these updates often. And so I hope that you will be able to join me as we try and see what's going on with this Vancouver market. Have a wonderful day. Talk to you guys soon. Bye.